Hey guys, Coach Julien here. In this video, I'm going to explain to you how I invest in stocks. Hi, I'm Julien, Regoli, CPA, CMA, your finance coach. I'm here to take the bullshit out of finance to help you understand how it all works. In my channel, I talk about three main topics. One is how to save money, two is how to invest money, three, how to think about money. I firmly believe that anybody can learn how to do it. You don't need a finance degree. You don't need to be a math whiz. Anybody can do it. All you need is to understand certain key concepts and apply them, and you can be well on your way to financial freedom. If this is the kind of topic that interests you, sign up to my channel and hit the bell button. You'll be notified whenever I upload new content. So how to invest in stocks. I'm going to explain to you how I select my stocks. First thing you want to identify is the sector. Some of you are knowledgeable in IT, some of you are knowledgeable in pharma, work in the pharma industry. The bottom line is each of us has different knowledge of different sectors, and that's your lead. Your lead is what are you interested in and what are you knowledgeable in. If you work in the pharmaceutical industry, you're in a better position to understand and know who the key players are, what are the upcoming products, who are the leaders, which biotech sectors are going to do well. You're definitely more knowledgeable than the average person about that industry. So that's a key indicator. One of the key things is to have a good platform to do your analysis with and do your research. I use what's called Y charts, and I talk about it because a lot of people ask me, what do I use? It's Y charts. I get no benefit from referring this. It tends to be on the pricey side, but there are some free things out there. Like I know Yahoo Finance provides some information. There's other things out there, so take a look. Let me show you what I do when I look at stocks. You've identified a stock. Let's say you've identified Metro. They're a grocery chain operating in Canada. They're based in Quebec. The groceries industry is really defensive because, hey, everybody's got to eat. Always loved Metro, especially after seeing how it continued to perform well during the lockdowns. So the first thing I look at is I take a look at the short-term performance of the price and the longer terms. In 6 months, you can see that what strikes me with Metro is how cyclical it is. You've got an up here, down, up, down, up, down, up, higher, down, up, higher, down, up, higher, down, up, even higher. Now down and hopefully up. So you can see that it's very cyclical. I look at the dividends. So it's giving a little bit of dividend. I think they could give out more. But anyway, this is one thing I look at is the P ratio. This is the price in relation to earnings. And I look at so I click on this. So everything is in blue as a link. And I look at how this is in relation to the past. So this is the view, this is the P ratio over the last 5 years, and it's got an average here that is interesting. The average is 16.17, and today the P ratio is 17.84. This is telling me that its price is higher in relation to its earnings over the past 5 years. So that's an indicator that it's not exactly at its cheapest level. Y chart provides these benchmarks, which are really interesting. Loblaws is trading at 21.68. The Northwestco is trading at 12.88. So this is a competitor trading at well below Loblaws and well below Metro. Definitely going to take a look at that. And then there's Alimentation Couche-Tard at 13.59. It's not exactly a grocery chain. It is a convenience store. They do supply basics. So right now what this is telling me is that Metro's PE is kind of on the high side. It's not a deal right now compared to its 5-year historical PE ratio. I like to look at the top fund holders because this is a great lead into potential ETFs you want to add to your investment. And this one, XST, is an iShares S&P TSX Cap Consumer Staples one. I would definitely take a look at this one. It obviously has a really high weighting on Metro. Be curious to know what else they own. Y charts presents comparables. This is basically a visual of the comparables. You can see that there's two sets of lines. There's these guys that kind of follow pretty much have the same kind of return level, but the red one, which is the Northwest Co is really an outlier here. It really is performing better than the others. I'm definitely going to look into this one because it's standing out. So we'll get back to that. Next thing I look at is good revenue growth, expense growing too, but not as much as revenue, and therefore you have a net income that is growing. So this is showing me a good trend. Good fundamentals on the income statement level. On the balance sheet side, I'm looking for a blue line, which is the total assets, that is well above the total liabilities. I'm looking for a good spread between the blue line and the orange line. And obviously, shareholder equity, that means the profits reinvested in the company are going up. Solid, healthy balance sheet. And then finally, the cash flow statement. It's really important because, the income statement is susceptible to accounting circus, but the cash flow never lies. Cash is king. Cash flow never lies. Where I look for here, again, the blue line is the cash flow from operations. So how much cash flow our operations generate? Super important to see this trending up. So this has really good fundamentals. It's looking good. The only thing I don't like about this one is that it's not a deal. The dividend is low for the cash that it's generating. What caught my eye is this Northwest Co. It's really standing out from a return perspective, and it really caught my eye when I was taking a look at the PE ratio comparable. I'm going to keep my Metro tab open, but I'm going to click on Northwest here. What I like about these results here is look at the dividend yield. It's more than double that of Metro's. It's got a dividend of 3.87 versus Metro 1.62. That's already I like that. Look at the profit margin and gross profit. So we've got 33% gross profit and 5.67% profit margin versus 20 and 4.47 for Metro. So it's more profitable. It's making more money per dollar of revenue. I like this. It's a business that's really well run. But let me click here on the P ratio. Look at this P ratio. Look at the trend. It's really sitting an interesting level compared to its 5-year average of 17.76. Sitting at 12.92. Loblaws, like we saw earlier, is at over 21. Metro over 17, and Alimentation Couche-Tard, which is really a convenience store. It's not really comparable, but anyway, all of these are higher than its current price level. So this is telling me that it's priced lower than its competitors and lower than its 5-year average. So definitely something worth looking into at 12.92. I'm interested to know what the fundamentals look like, what the financials look like. And look at this revenue line. Blue line trending up. Nice. The distance between the blue line and the orange line, which is the expense line, is growing. And net income is also trending up. It's double in the last 5 years. The balance sheet has a good gap between the blue line and the orange line. So the blue line being total assets, the orange line being liabilities. Shareholders' equity is trending up. So they're keeping the profits in the company. From a cash flow perspective, nice and trending up. So this company is definitely one that catches my eye. There are no red flags. In fact, they're pretty much all green flags. So folks, I hope you found this video useful. If you have any questions or comments, let me know. Drop me a line under the video. If you like this video, hit the like button. That's always very appreciated. There's more content coming. Subscribe, hit the bell button. You'll be notified whenever I upload new stuff. Thanks for watching today, and we'll see you real soon.